are you ready to buy the dip? So stock futures are up. They're up 800 points as of this morning and climbing. I think it was late yesterday afternoon that the stock market started to turn around, or as some people might speculate, that it reached its bottom. So for me, I think that's enough to justify adding a little bit into my portfolio. Not going to go crazy on it, but wouldn't hurt to throw $1,000 at some of my favorite stocks. So and then I don't think it's going to make a what they call a V-shaped recovery, where it just bounces right back to the previous level before the tariff meltdown began. I think it could, but I think a more likely scenario is that it'll continue to climb slowly over a period of weeks and months to come to get back to that level. So even if you miss the golden opportunity, quote unquote, of the exact point at which it reached the bottom, it's okay because you're still going to be buying stocks at a relative discount going forward. So as you get paid weekly or you get your pay settlements weekly, you can take a portion of that and continue to buy stocks. Now, I would say that the rise of the retail investor is a big contributing factor to why these uh, these downturns in the market don't seem to last very long. And it wasn't until several years ago that trading at stocks became free of commissions. When I started trading over a decade ago, I started really diving deep into um, you know research and trading and trying to do everything I can. But I was tired of just throwing my money into a 401k, for example, and let somebody else control my investments. So I wanted to try doing some of that on my own. So I started trading. And back then, it would cost you $20 commission or a fee for every trade you placed. And then it costs you another $20 commission. This is with E-Trade, for example, to sell. So you didn't want to do a whole lot of buying and selling because you're going to lose $40 by the time you're done. And did your stock really go up by $40? You have had to hold on to it for a significant period of time, for it to make that kind of a change. And it's like, well, this sucks. So then more competition entered the market, and as we see with competition and everything, the prices came down, the fees came down. So someone says, "I love your Dollar Tree glasses." These are actually Oakleys, but I always wear my glasses. Don't ask me why. But um, with more competition amongst the trading platforms, the fees came down, and this resulted in investors investing more. So this became the rise of the retail investor. So no longer was the institutional investors like the big banks, dominating the trade markets and picking the winners and losers. Now the retail investors could go in there, the individuals could go into the stock market and place their own picks. So there's a lot of speculation there, and speculation is just when you think for no other reason, no logical reason that that stock is going to, take off or go up. So it's like you're just guessing. You're speculating. It's like, I think gold prices are going to go up, so you put some money in gold. You know, there's a lot of research that goes into that, and I recommend a website called Seeking Alpha. If you want to do a lot of research. And I also recommend the YouTube channel for Professor G. I'll put some links in the description when we're done. But it's the retail investor that keeps these dips somewhat low because everyone's caught on to the idea of buying the dip, and these are great opportunities. They don't come along all that often. It doesn't mean you want to throw all your money in at one time, but if you kept some of your money aside, when these dips happen, it's like, okay, I'll buy some stocks while they're on a big discount, 30% discount. Um, I personally think, from everything I've heard and read, is that with the trade situation, a lot of things have to be worked out. They say it's going to be choppy seas. This is where it's going to be up, it's going to be down, it's going to be up, it's going to be down. So if if you're trying to time the market, it's going to be extremely hard to do. All the experts tell you never try to time the market, but every time it takes a dip, you can invest a little bit more. So that's my strategy. And for me, I'm a long-term investor. So some of my portfolio is long term for like retirement. Other parts of my portfolio is medium. I would say medium within the next 5 years or so. Those are for truck repairs. I have money invested for maintenance, and I have money invested for my next truck down payment. So I would like to see the market, come back because probably within the next 6 months, I want to buy another truck. So I need to build up that, fund there for my truck down payment. So those are the types of things that I'm investing for. So some of my investments going to be long term, some of my investments is for the medium term, and some of my investments is for relatively short term. Um, I would say some of the best stocks to invest in are an ETF called QQQM. That's I think it's like the top 100 um, technology stocks. You think of Nvidia, Microsoft, all the big tech companies, Google, Meta, which is Facebook. All those are in QQQM. And historically, whenever the market dips like this, they're like the first ones to recover because a lot of money just comes rushing into the technology stocks. They do very, very well. So I'll be investing in QQQM. Another one is just the S&P 500. The S&P 500 is down, 25%. Maybe a great opportunity. Um, Another ETF I like is called SCHD, which is a dividend stock. Now that's more of a longer play. That's I use that one for my retirement. But there's three good ones that I like. Now you could look at individual stocks, and that's more speculation. It could recover nicely. Why not? So if you want to invest more in Nvidia, that's a hot stock. Or Palantir, that's another hot stock. But those with the individual stocks comes more risk. And with the ETF, it's much safer. So it's up to each individual what their risk tolerance is. Sometimes younger people have more risk tolerance because they have, longer runway there to reach retirement. Whereas someone who's older, they're probably looking to retire in 10, 15 years. They're probably not going to take that much risk. So it varies from person to person. But this morning may be a great time to buy the dip. I think the stock market opens at 9. I think it's like 9:35 or something like that. It'd be interesting to see, how quickly it'll go up. It's expected to go up significantly. And why is it going up? I think it's the European Union was a big announcement yesterday that they're willing to negotiate. And that's like 37 countries within the European Union. So that was significant. And Japan is willing to negotiate on tariffs, and a lot of other smaller companies. As a whole, that's significant. And I still think that China is going to be problematic and could affect stock market going forward. Depending on how that goes, this is where the choppy seas comes in because we got like $1 trillion trade deficit with China. So if that could go that could China by itself could make the stock market go up and down. So there may be future buying opportunities. I don't worry about the stock market going down because I'm a buyer. If I was trying to sell stocks, that would be problematic. But I'm not looking to sell. I'm looking to buy. So either you're bullish or you're a bear, right? And if you're looking to sell, maybe feeling bearish. But if you're a bull, then this is great, because you're going to buy, add to your portfolio, while stocks are on sale. So that's my plan for today. And, we'll see, going forward over the days and weeks, if it continues to climb, which it might, because, a lot of retail investors are going to be jumping in, and they've grown in size and influence over the years. And they could definitely pull this stock market back out to where it was before this began. Um, and if you've missed the boat, there may be future opportunities. So it's awful hard to try to time the market. That's why all the investors tell you don't even try. It's like you don't want to invest too early when the market's coming down, but you can't really determine when it's hit its bottom. That's the tricky part. Now, everyone can see when it's coming out, but no one can tell you when it's reached its bottom. Well, it may have reached its bottom yesterday late afternoon, and it could be a thing where it goes up today and then next week it goes down some more. So nothing is guaranteed, but that's why I say invest a little bit at a time. A few $100s, $1,000, and then wait and see, and invest a little bit more. Wait and see, invest a little bit more. That's probably your best bet. All right, guys, that's all I got for you. Thanks for watching. We'll see you on the internet.